Hey, good morning. Let's go over today's trade plan. So heading into the overnight session, we were already expecting a directional move, which played out to the upside, and ES has already tested the 1938 to 1940 resistance zone, which is a very important inflection point on the larger time frames. It marks the larger time frame balance area high. So heading into the open, that is going to remain as valid resistance, but we have to keep in mind that on the smaller time frames, the buyers are in firm control heading into the open. Now, in order to get a sustained breakout above 38 to 40, we are going to have to see continued sustained upside momentum and broad market strength and participation from the other markets. So 38 to 40 is active resistance until broken, but if we get a breakout above 38 to 40 on high momentum and participation from the other markets, then we're going to have to be careful fading the resistance zones immediately above it. So the only time that it would make sense to fade the resistance zones above is if we are seeing some very clear-cut signs supporting the idea of a failed breakout attempt, where let's say if S&P attempts a breakout but the other markets are lagging behind and going the other way, or if there's simply not enough upside momentum to support sustained movement at higher prices. But in most scenarios, if you are getting a momentum breakout above 38 to 40, then you want to be careful shorting at the resistance zones above because the market may not attract responsive sellers until we get short-term exhausted into a zone which might be at 49 to 50 half perhaps. May get a little pause there, but it could be as high as 59 to 61 and even the zones right above it. So 59 to 61 is where responsive sellers can start to become more aggressive again. So 59 to 61, 64 quarter, 66 quarter, 69, 71 quarter, 73 quarter, as the market tests those zones, now those are areas where we can see a more aggressive sell response first time up. At the same time, keep an eye on the other markets because S&P so far has been leading to the upside, but there is a divergence on the larger time frames between the S&P and the other markets. So if the other markets start to fail, then we can get a pullback in the S&P as well. And we have to understand that the market is trading here at and near larger time frame resistance. So the idea is that the buyers are in firm control heading into the open, but now we need to see signs supporting the idea of continuation. And simply a lack of strength at 38 to 40 can result in a failed breakout attempt. So the way the market is setting up right now, based on how strong the markets have been in the overnight session, it doesn't seem like it's going to fail, but we have to be at least open to the idea and receptive to the idea, which means that we just have to be very focused on whether we are seeing enough underlying momentum, broad market strength, participation from other markets to support a continuation move higher. We've already gotten a reaction at 38 to 40 here in the overnight session, and at this point, given that buyers are in firm control, we do have to be careful on the short side because it could be setting up for a continuation move. On the downside, we have pre-market support 30 quarter to 32 half, and holding above that would just signal that the buyers are maintaining control, and a breakdown below 30 quarter, 32 half would be the first warning sign that the market is not quite as strong as it was in the overnight session. Below that, we have 22 half to 24 half initial support, and that's really the area that we're also going to use as the bull bear zone. So as long as the market's holding above 22 half to 24 half, we can still balance and buyers can still step in. But if you fail at pre-market support and initial support, at that point, a lot of the buying that has happened in the overnight session can be at risk of liquidation, and we can get a move down into the gap fill and back down into 08 to 11, and even 1898 half to 1900 half would be within reach at that point. and you would have a scenario where a lot of the overnight buyers would be trapped on the wrong side. So, that's the secondary scenario, and and that's only in the event that we're seeing clear signs of failure of this overnight buying. But until we see that, we have to give edge to the buy side and be a little more careful on the short side. So that's really how the context is set up. I think it is going to be helpful to again keep an eye on these other markets, Nasdaq and TF being the other markets that we monitor. As Nasdaq and TF approach larger time frame resistance, that can be a mechanism that can help you time an exit in the S&P or even a short in the S&P at a higher resistance zone. So, right now the markets are still looking fairly healthy, but we have to understand that, we are at a short-term inflection point, and we have to see that continued upside momentum, broad market strength, and participation from the other markets in order to continue pushing higher. And in the event of a breakout above 38 to 40, as long as those underlying signs are there supporting an upside move, then we have to be careful at the resistance zones above, because we can quite easily, test above 46 and probe above 46 at 49 to 50 half. And like I said, the sell side doesn't really have to aggressively step in until the 59 to 61 zone and up. So those are the main ideas heading into the open. Let's see how the market reacts to 1938 to 40 off the open. That'll help set the tone a bit, and we'll take it from there.